Lynn, the big news of the morning is that you've decided to look at your non-regulated renewable business, potentially with the option of selling that business. Why have you made that decision?
We reported strong earnings today, but also, as you noted, reported a decision to take a look at our commercial renewables business. Duke is 95% regulated, so we operate regulated gas and electric utilities throughout the Southeast and Midwest. And we also operate for about 5% of our earnings a commercial renewables business that we have been building over the last decade plus, really developing our expertise in the operations and development of renewables, wind, solar, battery storage. And it has been an important part of the company. But as we look ahead and we see the growth potential in our regulated utilities as we pursue the largest clean energy transition in the US, and we look at investments around our grid and resiliency and reliability and renewables and battery storage and other new technologies, we just believe this is the right moment to look at the strategic fit of our commercial renewables and really evaluate who is the best strategic owner at this moment. There's going to be competition for capital, and we want that commercial business to continue to thrive and grow at the pace that it's capable of, while we are also focused on growing the regulated renewables business and our regulated utilities in general. In this moment, we have extraordinary growth potential, and we believe this strategic review gives us an opportunity to really pursue that in the right way.
As you say, there's strength there, and your numbers today seem to reflect that, beating expectations by a wide margin. Lynn, is there any signal in this decision about how you see the mix going forward in terms of the energy that you're going to focus on? You clearly have to replace coal. You're doing that. You're making big step forwards into the way that you're going to do that. But is there a signal in this decision about how you are ultimately going to replace that coal generating capacity?
You know, Guy, no signal. What this represents is Duke looking at their portfolio, Duke looking at our portfolio and deciding how do we position and strengthen ourselves for the future. That clean energy transition that we have been talking about and targeting strong carbon reduction, 50% by 2030, net zero by 2050, is really pertinent to those regulated utilities that we're operating. There will be a strong investment in renewables. There'll be a strong investment in battery storage. We'll be retiring coal, expecting to be out of coal by 2035. So that replacement decision, that investment decision around the clean energy transition has always been centered in the regulated utilities and will continue to be. And this review of our portfolio is really looking at the potential growth and the potential investment over the next decade and saying, how do we best position Duke to pursue that growth in the regulated business, but also put the commercial renewables in the hands of a strategic owner who has the potential to grow it as well. And these are choices that we have to make as we move forward. And Duke has made a number of them over the years. We'll do a thorough and timely review. And we're very proud of that commercial renewables business and believe it'll attract a very attractive value in the market.
Consumers are facing a significant rise in the bills that they're going to have to pay. Lynn, at some point, are you anticipating that you will get pushback? At some point, are you anticipating that people simply will not pay? Where do you see the trajectory here in terms of utility bills? Are they going to continue to rise at their current rate?
Affordability, Guy, is top of mind at Duke because we believe in order for us to be successful as an infrastructure builder, we have to pursue clean energy, of course, but we also have to maintain reliability and affordability. You can't get those three things out of balance and be successful in building infrastructure. And so, to your point, fuel, one of our feedstocks for the production of electricity, has been increasing several times from where we were a year ago. And so our customers are feeling the pressure of that. And we're working actively to minimize that as much as we possibly can, spreading the recovery out over longer periods of time, taking advantage of the diverse set of suppliers and diverse resources we have. And of course, working actively with our vulnerable customers, those who could be challenged, even more so because of the impact of inflation. So this is something that we're working actively on every day. And as we think about the future, we'll always keep an eye on that affordability, reliability, and clean balance, because we think that's the formula for success.
Let's talk more about inflation. Let's talk about inflation reduction, the IRA, the Inflation Reduction Act that is coming out of D.C. What does that mean for Duke?
The Inflation Reduction Act, Guy, has some very meaningful benefits for our customers. And I'm talking specifically about the clean energy tax credits for renewables, for battery storage, for nuclear. And we see it as a potential to incent critical infrastructure investment consistent with our plans to pursue this clean energy transition, but also do so in a way that can meaningfully lower the cost of that transition to customers. You know, the point you were making just a moment ago about the impact that all of this investment can have on customers at the same time that fuel and other prices are rising. So we do see it as having a meaningful benefit to our customers. And we have always advocated for policy that allows us to continue building infrastructure in a way that preserves affordability and reliability.
Does this policy go far enough?
You know, that's the key question. And that's the compromise that always goes on when you're developing public policy. We look at this clean energy transition, Guy, as unfolding over the 2020s, the 2030s, and the 2040s. We see this as meaningful in this moment as we're investing in solar and battery storage. It recognizes the importance of nuclear, which we are also an advocate for and a strong nuclear operator. So I think it's a good step in the direction that we're going. And I would add to it that the infrastructure bill that was passed last year also has some very important provisions around the longer term investments necessary to reach net zero. So, investments around hydrogen, longer duration storage, advanced nuclear. I think the combination could be powerful on the path to net zero.